Thanks for tuning in to this week's news recap. First headline, Uniswap Labs restricts certain tokens. Last Friday, Uniswap Labs decided to restrict access for over 100 tokens through its user interface. Delisted were a range of synthetic assets, tokenized stocks, mirror stocks, options, and derivatives. The company cited the, quote, evolving regulatory landscape in its explanation of the cuts. Because Uniswap is a decentralized protocol, Uniswap Labs can only restrict tokens through its own interface. Users can still interact with the protocol through other portals. The distinction is significant. Uniswap, the protocol, is unaffected as it exists as a decentralized, permissionless smart contract running on Ethereum. Uniswap, the app, however, is controlled by Uniswap Labs, which is separate from the protocol, defining itself as a, quote, software development studio that contributes to the Uniswap protocol. Uniswap founder Hayden Adams put it best on Twitter. Just a reminder, Uniswap protocol equals fully decentralized permissionless smart contracts on Ethereum. Uniswap interface equals open source, GPL, or general public license codebase. app.uniswap.org equals Uniswap Labs' own domain that points to an IPFS-hosted instance of the Uniswap interface. Notably, Uniswap Labs' announcement comes soon after Securities and Exchange Commission Chair Gary Gensler hinted that digital assets backed by traditional securities could fall under U.S. securities law. Next headline. A new infrastructure bill looks to raise $28 billion through crypto taxes. In the latest version of the bipartisan infrastructure plan in the U.S., policymakers have proposed to raise an additional $28 billion through crypto taxes. These funds would be funneled into a larger $550 billion investment into the country's transportation and infrastructure. As part of the bill, reporting rules would tighten, with U.S. businesses being obligated to report any transaction over $10,000 to the IRS. Kristen Smith, executive director of the Blockchain Association, told CoinDesk, quote, we interpret this to mean software wallet developers, hardware wallet manufacturers, multi-sig service providers, liquidity providers, DAO token holders, and potentially even miners. In other regulatory news, Representative Don Beyer introduced the Digital Asset Market Structure and Investor Protection Act on Thursday. The bloc reports that the bill, quote, seeks to delineate the treatment of crypto assets under 5 securities acts, the Commodity Exchange Act and the Bank Secrecy Act, as well as Federal Reserve treatment of stablecoins and possible digital legal tender. Next headline. Binance cuts leverage and non-KYC withdrawal limits. Binance is moving at light speed to address increasing regulatory scrutiny. The exchange revealed over the weekend that it has begun lowering its futures trading leverage limit to 20x. It previously had an infamous offering of 125x. CEO Changpeng Zhao, aka CZ, cited consumer protection in his explanation regarding the move. On Tuesday, the company announced a reduction in the withdrawal limit for the lowest tier of KYC customers, cutting it down from 2 BTC down to 0.6 BTC. On Twitter, CZ explained the decision as a way to enhance Binance's, quote, KYC efforts to further its leadership in this area. While Binance, the global exchange, is working so hard to appear buttoned up, Binance US is eyeing a public offering. Last Friday, CZ said, quote, our partner in the US is looking at the potential IPO route. However, in an interview with Forbes, Binance US CEO Brian Brooks set the timeline for an IPO at about 36 to 48 months from now. As for Binance itself, CZ noted that the exchange is not quite ready to go public, but that could change in the future. Another potential shift for Binance, it could be looking for a new CEO. CZ tweeted, I/we would very much like to hire a strong compliance background CEO to show our commitment to compliance, as this is the top priority of the organization. However, he did clarify that, quote, there are no immediate plans to replace him as CEO, adding in a somewhat contradictory manner, quote, I don't need to be CEO and I am not leaving. I will always find ways to contribute to the community behind the logo tattooed to my forearm. Next headline. Tether's early days could come back to bite it. The U.S. Department of Justice, or DOJ, is investigating whether Tether executives committed bank fraud, according to a report from Bloomberg. The charges focus on Tether's early days, when the company allegedly lied about its crypto nature when opening initial bank accounts. Per Bloomberg, 3 unnamed sources, quote, with direct knowledge of the matter, claim that federal prosecutors are examining, quote, whether Tether concealed from banks that transactions were linked to cryptocurrency. As of now, no criminal charges have been filed against Tether concerning the concealment of cryptocurrency transactions. However, Bloomberg reports that federal prosecutors have sent letters to individuals at Tether, alerting them of the investigation. Such notices signal that senior DOJ officials could be making a decision soon on whether charges are warranted. In response, Tether published a statement which did not entirely deny the report, but indicated it was wrong. Quote, "This article follows a pattern of repackaging stale claims as news. The continued efforts to discredit Tether will not change our determination to remain leaders in the community. Tether routinely has open dialogue with law enforcement agencies, including the U.S. Department of Justice, as part of our commitment to cooperation, transparency, and accountability." Next headline. Stoner Cat's NFT drop led to big ETH losses. Wednesday's Stoner Cat's NFT drop resulted in the loss of 344.6 ETH, or more than $750,000, due to a number of failed transactions combined with high gas fees, according to data from Dune Analytics. Produced by Mila Kunis, Stoner Cats is an adult animated series that can only be accessed via NFT. The cast is absolutely star-studded with Kunis, Ashton Kutcher, Chris Rock, Seth MacFarlane, Jane Fonda, and Vitalik Buterin starring as digital collectibles. The 10,420 Stoner Cats each sold for 0.35 ETH in just 35 minutes. Meow nits. It was undoubtedly a success. At publishing time, the project ranked 4th in weekly volume on OpenSea despite only being dropped a few days ago. However, due to an error with the minting contract, many would-be collectors were left with nothing but lighter digital wallets. Any address that attempted to mint 20 NFTs, which is the max allowed per address, without manually adjusting the gas limit in MetaMask, was left with burned ETH and no NFTs, as reported by The Defiant. Per Etherscan, one user lost 5.8 ETH, worth more than $13,000 at the time, due to the error. As of now, Stoner Cats has not announced any plans to rectify the situation. Next headline. Robinhood goes public and eyes crypto staking solution. On Thursday afternoon, Robinhood officially IPO'd, selling 55 million shares at $38 each, giving Robinhood a valuation of $31.8 billion. At press time, Hood sits at $34.90, about 8% off its initial listing. While going public is a huge deal in traditional finance, Robinhood also made headlines in the crypto world this week. On Sunday, Decrypt reported that Robinhood is looking to add crypto lending and staking to its platform. At the company's roadshow ahead of its IPO, CFO Jason Warnick revealed that Robinhood is, quote, "making a lot of investments in things we know our customers want, such as wallets, lending, and staking." He added, quote, "We think there's a big opportunity in front of us, and we look forward to delivering more products for customers." Warnick's comments led the blog to unearth a panel from an Ethereum-focused conference held in Paris last week, where Uniswap Labs growth lead Ashley Schaap said Robinhood has held talks with Uniswap Labs. In Schaap's words, "One of the cool things we've actually been talking about with them, Robinhood, is a way to use Uniswap to automatically settle a trade, for example, right when it happens with the user." Robinhood has remained silent on the topic, while Uniswap Labs has confusingly both confirmed and denied the rumors. The blog reports that an inside source has confirmed the talks. Next headline. Amazon is hiring in crypto but denies plan to accept crypto payments. Amazon is looking to hire a, quote, digital currency and blockchain product lead, according to a posting on its job board. The specifics of the job, which was first reported in Bloomberg, are wide-ranging, with the Commerce Giant asking for someone with, quote, expertise in blockchain, distributed ledgers, CBDCs, and cryptocurrency. The product lead would be in charge of developing a roadmap for both Amazon and AWS's foray into the world of digital currencies. Also this week, many anticipated an announcement from Amazon regarding the acceptance of cryptocurrency as payment. The rumors arose from a British newspaper report on Monday, which cited an inside source claiming that Amazon would accept Bitcoin payments by the end of the year. However, Amazon, in an email to CoinDesk, dashed those hopes, saying, quote, "Notwithstanding our interest in this space, the speculation that has ensued around our specific plans for cryptocurrencies is not true." Next headline. High-profile backers fund Paxos' Series D. On Thursday, Paxos announced a $300 million Series D backed by Bank of America, Coinbase Ventures, FTX, and Founders Fund. Notably, Bank of America, the second biggest bank in the U.S., has now shown interest in blockchain and crypto twice through Paxos, as the bank previously tried out Paxos' settlement system in March to clear stock trades. In related news, during its second quarter earnings call, Paxos' biggest client, PayPal, hinted at big plans for the payment company in the world of digital assets, specifically citing smart contracts and DeFi. Time for fun bits. Goldman Sachs' DeFi, in air quotes, fund. On Monday, Goldman Sachs filed an application with the U.S. Securities and Exchange Commission for a DeFi ETF. DeFi, as I'm sure most of you know, is short for decentralized finance, which apps like Uniswap, Curve, and Aave are pioneering in crypto. It appears that Goldman Sachs did not quite get the memo. While its filing was on the right track with the name of its ETF, dubbed the Goldman Sachs Innovate DeFi and Blockchain Equity ETF, the actual companies involved in the fund are a far cry from DeFi. The top 3 weightings of this DeFi ETF are allocated to 1. Nokia, 2. Facebook, 3. Alphabet. All right, that's it for Fun Bits. Thanks for tuning in. To learn more about Leah Callan Butler and Axie Infinity, be sure to check out the links in the show notes. Heads up, everyone. The Unchained Newsletter has switched from a weekly news recap to a daily email. Each morning, you'll get 4 to 5 quick headlines, a crypto meme or 2, and a few recommended reads. You can find the link to sign up in my Twitter bio. Unconfirmed is produced by me, Laura Shin, with help from Anthony Yoon, Mark Murdoch, and Daniel Ness. Thanks for listening.